All right. Nice highlight again with the icebergs. They've been coming in and providing really good information. For instance, this green guy is arresting by iceberg. Now, he came in prior and the market ran away from it, like it generally does when they're new. He was showing a lot. Not only did he do a decent number, but he had a lot that he was showing, I think 100 or 150 at the time. And we're able to see it 100 right in here based on what he's showing. And an iceberg is just what it means. There's more beneath the surface. So there's more contracts bid for. So they ran away from it, came back down. Interesting thing happened here. He moved it lower and price goes down to where he moved it. And generally that's the reaction. He moved it, price melts down. And there's a lead lag in it too. Not a huge lead lag, but it does give you the opportunity to be bearish if you're not, to get short if you're bearish and such. So it goes down to that. Then he moves it again to these 44 halves and it goes down to it, tests it a couple times. And finally, when they got through it, it's chopping around it. And what we had said is if they could stabilize and get really back above it, it's bullish. And they do funny little thing called a head fake. They chop back and forth. They make an attempt to go lower and then quickly come back up, which is a big bearish to bullish transition. You had order flow with the iceberg and a place where it can get bullish above. You had a head fake pattern where you shake out longs and stick shorts to create, and this might not look like much, that's almost a 10-point rally from here to here. And while it came back down, it's a 10-point rally. Sharpen your predictive skills by seeing this stuff in real time and then know how to use it. Again, two-step process. See it, know how to use it. Most people don't even have the first step, let alone the second step. Third step is knowing where you're wrong. So even if they get to the first and second step, they'll crumble on the third step. But generally, most people aren't going to get past step one, even if they get there. They're in platforms that show you how many the guy's working, which gives you a really good, accurate assumption as to how many he might have left. A lot. And if the market's going to run away from it or fill it, and then when he moves it, all these things, where he came in. So once we recognize and reveal that this guy's an iceberg, we could find where he started, like this one. We find out where, well, no, this one because it's moved. Remember, this chart down in here is a magnifying glass, the one above it. But there were icebergs that they come in, the green line goes back to where the guy put it in. And so we pull up all that information on it. So again, they move it, it's bearish. They move it, it's bearish. It's a magnet to come back and touch them. They get through them. And once they pop back north, it's at least temporarily bullish. We had another one of these that happened later on in the morning. Same thing that essentially called so far the low of the session. But if you're not paying attention to this, and this is like guys in the room, I could ask guys in the room, now that you've seen it and seen the value of it, snapped the fingers and didn't have it, you'd feel lost. And that's when you know you have something that's working for you. Be safe, subscribe, comment,